and we are all good to go. So welcome once again. Title of today's presentation is Challenging Times for Call for Powerful Strategies, and here's one you can use. Challenging technical issue times as well, because we just had the sound go out and we had to log back in, but thank you so much. Let me share with you an example, if you didn't see this before, how most traders trade, all right, during these challenging markets. Someone looking at this market right now would say, well, look at this. You know, we've gone up, but look, we're really heading lower. We broke the support right here. But guess what? This is a nice candlestick pattern. In fact, it's a hammer pattern, okay? Now, reversal patterns usually call for some type of bottom. So what you want to do is buy there, right? So most traders would buy thinking we've bottomed out, and then look what happens, all right? Kind of challenging, right? You just lost about 65 points. Well, the strategy I'm talking about today actually would not have had you buying, but had you selling right here at the very top before you even thought a bottom was in place. And if you missed that, another signal would have been generated. So it would have given you two chances to capture some of those 65 points. And I know a lot of traders will come up to me and say, well, Steve, how do I learn to trade something like this? I mean, you're, sure, you know how to do it, but how would I learn? Well, I put together and developed the PTS Primo charting platform with Pro Trader strategies, specifically designed to make trading simple so that you could learn how to trade through these challenging times. So once again, my name is Steven Primo, and I thank you all. This is it. For those of you who just joined us, this is the second time we're going to try this webinar. We just had some technical issues, but we're all about educating you, so that's okay. We want to teach you how to trade. That's our only goal, and you'll see in this presentation how much attention to detail we do that, because we're first and foremost an educational company. If you come here once again thinking I'm going to tell you what to buy or what to sell for this afternoon or what to do tomorrow, you've come to the wrong place. We don't believe in those type of concepts. Our philosophy is to teach you how to trade so that you can ultimately do it yourself. So we're going to show you exactly how we believe in that, how strongly we do in today's presentation. But before we begin, as always, we're first required, before we begin, to share our disclaimer with you. So please take a moment to view. I'm going to share with you a lot of performance results using this particular strategy that you can trade in challenging times. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. Now, another way to educate yourself by what we teach and what we promote on a daily basis is to follow us on Twitter, because every day I post different information, from little bits of financial wisdom to signals our strategies have generated. You may want to copy down our handle right there, abbreviation for specialist trading. So please feel free to follow us on Twitter. Remember, once again, we are not like most webinars you may have attended in the past, and that our only, and I really mean our only goal, is to educate you as traders. You see, it's very simple for me just to say and give you a list every night and say, buy this or sell this, but I would really be doing you a disservice, because I can almost guarantee you that the majority of you would lose money, because you wouldn't really know the rules, you wouldn't know how to trade it, it wouldn't feel comfortable to you, it probably wouldn't feel an extension of your personality. So as you can see, as an educator, my goal is not to force feed you signals or tell you what market to trade, the way so many of the websites do, or the way people do on TV, but my goal is to teach you how to trade with the specialist edge. When I was struggling some 43 years ago on the floor of the Pacific Stock Exchange, my mentors taught me the specialist edge, and they have sustained me now going on 4 decades. So hopefully my teaching will be able to do the same for you. Now, we're going to be sharing with you a lot of information, but please, let's wait till the end to ask any questions. That way we won't really have to stop for every slide. I promise I'll get to each and every one of them. The only question that's answered now is the most common, and that is this being recorded? Yes. So hopefully, if we are able to get through this entire presentation without any more technical issues, if you can see and hear me okay, you'll all get a video recording to this class, all right? Okay, with that stated, let's begin today's presentation. And I remember, as I stated, when I first started trading some 4 decades ago, I was struggling tremendously. I mean, if you're struggling now, or if you have been, I know what it's like. I know what it's like to look at your trading every day and wonder if you're going to make it, and wonder if it's worth all the hard work and effort, and most especially the money that you're putting into it. Well, here's what my mentors told me. These were traders on the floor of the exchange when they saw how much I was personally struggling. They said, Steve, one should never buy a stock, or for that matter, anything, if you're trading futures or currency pairs, but you should never buy something if it appears oversold. And you should never sell a stock because it appears overbought. Unfortunately, I would venture to say that's how the majority of all traders trade. Most traders really don't put any more thought into it rather than saying, well, this has gone down too low or it's gone up too high. I said before, I'll say it again, in March, we had a terrible, terrible down market, a crash. One of the 4 crashes I've experienced. I've experienced the crash of '87, the dot-com crash in 2000, the financial crisis in 2008, and this last crash that happened with the pandemic virus crash. Now, we all know that things got terrible towards the end of March. But I had people telling me, friends and family members and other traders, at the very beginning of March, telling me that they were going to buy everything because the market had gone down too quickly and too fast, and that stocks were so cheap, they were just going to double up. And I said, well, good luck with that, because I know that goes entirely against our philosophy, and unfortunately, that's the way most traders trade. But as my mentors taught me some 4 decades ago when I was doing the exact same thing, you should never buy something because it appears oversold, and never sell something just because it appears overbought. So that brings us to today's presentation. This was the financial wisdom and the thought of the day. We're going to be talking about strategy number 9. This is a great, relatively new method we have, and let me share with you some of the highlights. It's a proprietary pullback method. So what does a pullback mean? It means that you're buying low and selling high. I know many of you are saying, wait a minute, you just told us not to do that. Well, let me share with you in just a few minutes why we're going to be buying low and selling high, which goes counter to everything I just said. Now, you can apply this to any market, any time frame, and any direction. Because of the way it generates signals, this is an ideal strategy for option traders. All right? I'll share with you in just a few moments, but it's great for option traders because many of the option premiums will be at a really inexpensive price, and therefore it's perfect if you're an option timer. With all of our methods, though, we ask you to paper trade. You must first practice. You must first rehearse any career, any endeavor, any hobby before you get involved. It's no different with trading. You have to paper trade first. Now, our edges at specialist trading is consistency. That means that you will have losses from time to time. In fact, I'll show you a couple of trades that there were losses, but a consistent method is one that's able to recoup those losses sooner than later. So strategy number 9 is an extremely consistent method. Now, we talked about some of the process and the format that goes behind strategy number 9. Remember, it's a pullback method, and the way it generates signals is that it employs 2 simple indicators. Now, I apologize, I can't divulge what these rules are specifically, because if I did, there's only 2 rules, and I would be giving away. I'm sure you could reverse auto engineer it, and you could come up with the answers yourself. But let me just share with you what it's based on. These 2 simple indicators and their relationship to the price automatically produces and generates the signals. Now, let's say you are a buyer. Well, in an overall uptrend, the buy signals will be generated during a decline. So see, that's how we're buying low. We're buying low on a short-term sell-off, but the overall trend is up. So we're really not just simply buying low and selling high. We have to be in an overall uptrend. In other words, we have to be in sync with the overall trend and look for a sell-off. Now, if we're selling, it's the exact opposite. We have to have an overall downtrend. We have to be in sync with the overall downward movement, and then we look for a little bounce or rally. That's how the sell signals are generated. So to the unrefined trading mind, they will think, hey, you just said you don't buy low and sell high, that's the recipe for disaster. Well, it is if you're not in sync with the overall trend. See, that's the secret. You have to be in sync. Now, most traders will say, well, I am in sync. The overall trend is up or down, but I would say the majority of traders really don't know how to define the overall trend. That's what gets them in trouble. Let's look at this example, generic example of pullback trading. So this is where we, this is where we had difficulty with technical issues. So we're starting right where we left off. Now, to explain how pullback trading works, this is a generic example. Most traders, they'll see an uptrend. If you're long or if you're thinking about going long, you say, well, listen, the market is in an uptrend, so I'm going to buy. But then this happens, right? You start to see a little sell-off. So you say to yourself, well, I think the trend is over. I guess I should sell my position, and maybe I'll go short if I'm more aggressive, okay? Well, here's the difference with pullback traders. Pullback traders look for this little bracket. And if all the requirements are met within this bracket, well, then actually this is not the change of trend. This is just a buying opportunity. So you want to buy on that short-term sell-off as a pullback buy, because what will usually happen is price will resume its overall upward trend. So that's the difference with a pullback trader. We look to buy low in an overall uptrend. The same thing if we're selling. Most traders will look at this and say, well, Steve, the trend is down. And then when things change, they say, whoa, the trend's over. We have to buy now because now everything's okay. Market bottomed out. It's time to cover our shorts and it's time to get back in. Kind of similar to what's happening in the markets recently. In fact, the last week or so, right? So most traders will say the trend's changed, time to buy. Pullback traders use their analysis, use the requirements, and while we're in this little bracket, they'll say, actually, you know, this meets the requirements for a sell. So rather than look at this as any type of buying opportunity, this is actually a selling opportunity because the overall trend is still down and you should be able to continue in that downward direction. Does that look similar to maybe what's happening today? Check it out for yourself. All right, so let's look at the trading process behind strategy number 9. And remember, we developed, Pro Trader Strategy and myself, we developed the platform specifically so that you could learn how to identify these setups and how to learn the process, how to know what the overall trend is without me being next to you at your side. We have students all over the world in every state in the United States, so I can't be with each and every one of you personally mentoring you, but we can develop this platform that teaches you along the way. So remember, our PTS Primo charting platform was specifically designed to teach you how to trade pullbacks in these overall trends. All right, so let's look at some strategy number 9 examples and how you could apply it learning on the platform. And remember, once again, this is all new territory in today's presentation. So if by any chance the internet decides to go down again, please send me an email or go to Webinar Does or send me on the question and answer box. Let me know if the sound has gone out. But I trust you're all seeing and hearing everything clearly now. I see all the green lights are on, so it looks like everything's back to normal. And I don't want you to miss this section because I'm going to show you some really nice examples. Okay, let's start out now and let's look at RTN. This was just in the middle of March, just a couple of weeks ago, 2 or 3 weeks ago. Obviously, someone looking at this would say, wait a minute, Steve, we're in a downtrend. I don't need any special indicators or strategy to tell me that. We're clearly in a downtrend. But look at what do we have here. This is a bullish engulfing pattern, right? That's a reversal pattern. That's where the bottom is. And are we oversold? Well, yeah, we probably are. Look at all these indicators where they're tremendously oversold. Then we have a bullish engulfing pattern. You know, I think we should buy this. And all of a sudden, guess what? The market does start to rally. So we say to ourselves, wow, I'm not going to miss this. There are some really cheap prices. I'm going to buy here. You probably decide to jump in like right here and you have a day of profit and you think, wow, I'm a genius. I'm going to make so much money. Why? Because you're with the trend, right? This is a valid uptrend. Well, here's how we find if we're in a valid uptrend or not. On our platform, you want to click on here, our buy-sell line in the upper green strategy tab. The buy-sell line tells you whether you should be buying or selling. Let me show you how it works. Once you click that on, you'll get a drop-down menu. And here are the 4 different features of our buy-sell line. Let's just pick the 50-period simple moving average because that's what the buy-sell line is. Once you click that on, you ask yourselves, where is price in relation to that 50-period moving average? If it's above, then you're right, the trend is up. But if it is below, that is not an uptrend. That is an opportunity to sell. It is a bounce in an overall downtrend. So you have the right fertile conditions for a pullback. Now that you know that this is a pullback scenario, we teach you all the rules, but just to check your work, click on strategy number 9 right here in the upper green strategy tab. Drop-down menu appears, just click on signal arrows, and guess what? You're right, that is a valid signal. Remember, we are not a black box company. We do not just simply say, well, click on the arrows to find out where a signal is. We teach you all this, and we want you to eventually get to the spot where you don't even have to click on the arrows. You'll know if a signal is generated or not. But while you're learning, until you get to that point, we provide you with these educational arrows to check your work. So guess what? That was a valid sell signal, and the stock dropped 40 points coming into April, okay? You see how this works? You see how it's in your best interest not to jump into this rally, but to actually look for a shorting opportunity. That's how a pullback method works. Let's look at another example here. Now this is in Zoom, all right? Everyone was talking about how great Zoom has been, but it's funny how everyone just noticed it a week or two ago. Let me share with you how Strategy 9 noticed it coming into February, actually in January, almost 3 months ago. All right, if we look at this chart here, in January, we see that, well, we're kind of headed higher to lower. We have what we call here a bearish engulfing pattern. That's a reversal pattern, and it looks like we're in a clear downtrend. So I don't want to touch this stock. If I'm not a shorter, if I don't like to buy puts, I'm not going to touch it, or I'll just stay away and I'll look for something else. But what is the actual trend? It's simple. On our platform, click on the buy sell line in the upper green strategy tab. In the menu, click on 50 period moving average and ask yourself, the first thing you ask yourself, where is price in relation to the buy sell line? Now, if price is above, well, sure, you're in an overall uptrend. If price is below, you're in an overall downtrend. So as we add the buy sell line, where is price? It's above. Even though we've come down to it, we are still above. So are we in a downtrend? Absolutely not. This is actually an opportunity to buy. This is a pullback in an overall uptrend. Now, just because we're in a pullback, I don't want you to say, well, Steve says to buy, right? We just buy at the market. No, you have to apply structure in the form of strategy number 9 up here. Now, we teach you once again the rules. In order to check your work to see if signals were generated, click on signal arrows to check your work. Guess what? Not only one, but 2 buy signals were generated. You see how the first one was generated at the low of the day. This is what we mean by it's opportune for option traders, because if you close on the low of the day, doesn't it stand to reason that that call or that option will be a lot less expensive? The premiums will be a lot less expensive. So this would be an opportune place to buy some perhaps out of the money calls, maybe some type of spread with a bias to the upside, because we all know what happened. All right, the stock has gone up 90 points in 2 months. Now, unfortunately, most people found out about it right here. Right? It's funny how we found out about it about 3 months ago. Why? Because the market tells you everything you need to know. That's why we don't have chat rooms. That's why we don't give out signals, because we teach you how to look for this on your own. Okay, you can scan for it, you know what to look for, and you can make your own decision. I'm not here to tell you what to buy or sell. I'm here to teach you so that you can decide what to buy or sell. All right, let's look at VLO. This was the opening chart we looked at in the presentation. Obviously, in hindsight, we're in a clear-cut downtrend, right? I mean, sure, we're in a clear-cut downtrend, but people want to know, how could we have known that in advance, all right? There's no way to look at that and see that you could have known, way up here that we were in a downtrend. Well, maybe not, because if you apply the buy-sell line, where is price in relation? Well, we had one close above, and then we quickly went back down below. So that's not enough to tell us that the trend has changed. You need at least 3 to 5 closes above or below. We only had one close above, and then it closed right back down below. So the overall trend has always been down. I don't care if you have a hammer pattern right here. I don't care if there's a bullish engulfing. I don't care if there's a doji. It makes no difference. If the overall trend is down, you're a seller. That's it. The odds are in your favor. So if you're a pullback trader, then you want to look for these little bounces, these opportunities. And once again, there was one right here at the very top, and then another one here on this little bounce. Think this could have helped you? Now, we've all known how traders have been struggling this last month or so, saying, gosh, this is a tough market. Who would have known that it was going to just fall out of bed like this? Who would have known VLO was going to fall 65 points? Well, we didn't know it was going to fall that much, or maybe even more. All we knew was that in January, price was below the buy-sell line. So we knew that it wanted to go lower. So why would you ever be buying anything, or why would you hold on to a position if your stock or your future, your currency pair is below the 50? You should be out or looking to get out if your position is below the 50. All right, another example, IBM, okay? This was coming into February. Price is above the 50, so the overall trend is up. Look at this sell-off, all right? Is this a downtrend? No, it's a buying opportunity. It's a pullback. And strategy number 9 generated a buy signal right here on the 30th of January, 22 points in the next week, okay? Think you could have done well trading options with that? Another example in the LK. This has been in the news lately, okay? A lot of people say, boy, I wish I could have gotten involved with that. Well, This is how we teach you so that you can be involved in big moves like this. Rather than looking at this like, oh gosh, I was on the wrong side. Why did I buy this? All you have to do is apply the 50. It automatically tells you the overall trend is down. Look for a bounce and then start applying the rules we teach you in the course. If they all come together, you'll see a sell signal. Now, a sell signal was generated on the 26th of March, okay? Just about a week ago. And then look what happened. You had ample opportunity to buy puts or to go short. So with our teaching, you never have to play that victim role that so many traders love to do. They love to say, gosh, why did I buy this? I went to that chat room and they told me this was a buy. Or why didn't I sell this? I missed this. I didn't see this. Well, you could have scanned and seen a perfect scenario for this the night before to go short on our platform. All right, let's look at another example here in APT. This was February coming into March. Price appears to be going nowhere, right? But the whole time we've been going sideways for almost over a month, where has been the relationship of price in relationship to the 50? Price bars have been above. So even though price is going sideways, the overall trend is still up. Now, there were multiple buy signals generated, a couple here. Not much has happened in 2 weeks. And then one last one was generated on the 19th of February. And then it finally kicked in. A quick 35-point gain in just a little over a week, okay? So sometimes you have to wait for these things to kick in. But if you give yourself enough time, if you give yourself enough room on our stops, which we teach you all of this in the course, you should be okay. Now, remember we talked about consistency, okay? Excuse me. Consistency means that there is an awareness you will have losses from time to time. That's okay. There's nothing wrong with that. So if anybody ever tells you, I have a method that never loses, it's only lost once in the last 10 years, I mean, that's silly. Like, good traders, consistent traders are always losing, but their methods are good enough to make up and recoup those losses. For example, right here, we had two strategy number 9 buy signals in Zion, okay? They're above the 50, and then look what happened. Obviously, it didn't work out. Now, if you used one of our average stops, we teach you upwards of 6 or 7 different stops in the course. If you use just an average moderate one, most likely you would have lost about 5 points, okay? I mean, it depends how many shares you have, but that's a fair, generic size loss there. What happens at this point is most traders will say, well, boy, this stuff never works. I'm just going to go in the corner and sulk because this guy's, he taught me something that doesn't work. Consistency means that you have to be aware and get back on your horse again, because weeks later, beginning of February, another signal was generated, but this time it was a sell signal. We're below the 50. We have a nice little bounce, and look what happened. Do you think you could have made back that 5 points you lost? This is what we mean by having a consistent method. It means you are aware that you will have losses from time to time, but that's okay. A consistent method is one that's able to recoup those losses. What you don't want is some roller coaster method that produces these tremendous gains in a relatively short amount of time and then give them all back, which I'm sure we've all been there before, right? So that's what you don't want. Okay, let's go through the next one. Let's see here. Now remember, this is what I usually get from most traders to say, this is just too simple, Steve. The 50-period moving average, that's it. Well, this is what I'm teaching you. Most traders or people that come to my webinar say, well, aren't you going to share with us something that's really complicated, something that really, really makes me wonder, like, wow, that's an amazing thing. It just knocks my socks off. I think I've never heard of such a thing. Well, usually those are the things that don't work. What work are the simple things. And what I've just taught you right now in this webinar is the 50-period moving average, our buy-sell line. This is probably one of our most important tools we have. And most traders would say, this is ridiculous. It's too simple and that's it. Well, go back and look at your last 10 or 20 trades. Okay, I can almost guarantee you that the reason why you lost was because you're trading out of sync with this simple rule. Most likely you're buying below the 50 and selling above. That's why you have losses. That's why your trading is not consistent. Sure, every once in a while you'll have a great trade and you'll think, boy, I'm a genius. And then most likely you've given all back, right? I mean, trust me, I've been trading long enough. I see it all the time. And I was there when I first started trading. I did the same thing. But as I say many times in my seminars and online, if I was stranded on a desert isle with one of the tools that I've been using, it would be that, the 50-period moving average. So if you've come here today thinking I'm going to give you some grand indicator or some way to trade this, you're missing the point. This is probably the best thing I could ever share with you, the 50-period moving average. Let's look at another example here, TDOC, all right? Where is price in relation to the 50-period? First question I'll ask you. It's above, right? Right, so if price is above, is the overall trend down? No, it's above, right? So the overall trend is up, so that means we are going to be sellers or buyers? We're going to be buyers. We're only going to be looking to buy. So on this sell-off right here, we had a cluster of buy signals generated. And we've got a nice little rally going, okay? And then ultimately, we got another signal. So if we hadn't sold, we took our profit, we could have doubled up or tripled up, or if we had already taken a profit, then we could have gotten back in and taken advantage of the 95 points. Why would you ever want to consider selling anything while price is above the 50-period moving average? You see how powerful this simple tool is? Let's look at United Airlines. We all know that the airlines have taken a huge hit in the current market. In March, the markets were just getting slammed because of all the selling. Wouldn't you have liked to sold at the beginning of February? I know many of you are saying, well, Steve, yeah, but I need to know the rules to this. Well, once again, there's only 2 rules. I can't divulge that. But how about the simple rule I share with you of the 50-period moving average line? Because you see these clusters of sell signals in United Airlines, all right, 4 altogether. They were generated below the 50-period moving average. Once again, if you've come here thinking I'm going to give you some convoluted, never seen before tool, way to trade, you've come to the wrong place. You'll probably have that gambling mentality, which I talked about. It's the simple things that work, not the really complicated ones. And I can't get any simpler than saying if price is below the 50, you should be a seller. Now, we have a little bounce here that occurred the first week of February. All these sell signals were generated on that bounce. So this is a pullback method. The second thing I've taught you. Pullback traders sell on the bounces in an overall downtrend. Now, you think you could have used that coming into March. Look at how terrible March was. Now, the traders who have this gambling mentality say, gosh, I was buying here all the way down because price was so cheap. It was so cheap right here, and then it got even cheaper here, and then by here it was really cheap, but I had no more money left. And then it finally started to bounce. And I know it's going to be making new highs by the next month, right? Well, if you think it's going to be making new highs, ask yourself once again. This was in the end of March last month. Where is price in relation to the 50-period moving average? Price is still below. And guess what? Strategy number 9 continued to generate, even in this so-called uptrend, it continues to generate sell signals at the end of March coming into April. So you see how simple this is? Once again, if you want to be a consistent trader, it's all about the simple techniques, the simple rules, not the convoluted, overcomplicated ones. All right, so let's look at some different markets and time frames. I know not everyone trades stocks, and not everyone trades, even if they do trade stocks, daily bars. Let's look at a weekly chart of the spiders. This is before the market fell out of bed. All right, we're above the 50 on a weekly time frame. We're having a nice rally, and then we sell off. Is the trend over? No, we're still in an overall uptrend. A buy signal was generated. 45 points or 3,000 Dow Jones points coming into February of this year, okay? How about USO? Okay, that's the ETF representing oil drilling and the oil market. Kind of looks similar to United Airlines, right? This was in February. Massive sell signals generated here. If anyone was thinking of going long oil, I don't know what you're thinking of. I have so many trader friends and just friends who say, gosh, Steve, oil, have you been watching oil? Isn't it amazing how it's fallen out of bed? There's no way anyone could have thought that or saw that coming, right? Well, really, it was fairly simple. I think in January, the price of oil was below the 50-period moving average. So you could have asked me, and I would have said, yes, the overall trend is down. And they said, wait, how would you have known that? Well, you apply the 50-period moving average. Completely different market, but the same concept can be applied, and we all saw what's happening. How about a 5-minute chart of the E-mini futures? Okay, any futures traders out there? I use this with my own futures trading. Here's a 5-minute chart. This was on April 1st. Look at this nice rally happening here in the morning. Most people say, whoa, we're going to make some nice gains here today. And the whole time we were rallying, I was looking for sell signals. Why? Because we're below the 50. Until I get 3 to 5 bars closing above, I'm still looking at this overall trend is down. So 2 sell signals here, 40 points to the downside. That's $2,000 per contract. Now, some of our traders, myself included, did not make 40 points because I'm sure no one knows how low something is going to go. So you take, you want to take 2-point profit, that's fine. You want to take 5 or 10, that's fine. It's entirely up to you. Remember, you are in charge. That's our philosophy. Here's an example of the dollar yen, a 4-hour chart of the dollar yen. Once again, above the 50. We have a sell-off here. Is the trend over? Look at all the downward closing bars. But as long as we're above 50, the trend is still up. So this is a buying opportunity, 550 pips in 4 days, okay? This is why most traders fail. They are selling above the 50 and buying below. You will have a greater level of consistency if you actually do the opposite. This was one of the first things my mentors taught me some 43 years ago, and what I truly believe has been able to sustain me. That's why I always say, if I were stranded on a desert island, could only trade with one tool, that would be it, the 50-period moving average. Okay, so let's review before we go into question and answer portion. Remember, this is our proprietary pullback method. It enables you to buy low and sell high as long as you're in sync with the overall trend. You can apply this to any market, any time frame, any direction. I showed you stocks, futures, currency pairs, weekly bars, ETFs, makes no difference. Because of the way some of these bars close, this is ideal for option trading. You can buy some really inexpensive options this way. But remember, if you decide to become a student of mine, we always require that you paper trade first. Most likely, it's guaranteed you will lose money because you jump in too quickly and you don't study the rules and the process. You need to study and paper trade so that you fully understand the process. We are not a company where we just say, yeah, just go to the platform and press the arrows and look for a buy or sell signals. We don't believe in that. We want you to know why you're doing something, okay? Our edge is consistency. I showed you a couple of examples where they had losses. That's okay. They were all recouped quickly. That's what you want trading. You don't want to buy something and have a huge profit and say, boy, this is amazing, and then the very next couple of trades, you give it all back. That's a gambling mentality. If you're looking for excitement, if you're looking for a brand new indicator, if you're looking for a rule that you've never heard before, you're a gambler. That's not the way trading is. If you're trading correctly, gambling is different from trading. Trading is boring, actually. It's basically like fishing. You just basically cast out your line and wait. The same way with trading, but that's how you become a consistent trader. As my mentors taught me some 4 decades ago, one should never buy a stock simply because it appears oversold. And you should never sell a stock, or for that matter, any market, because it appears overbought. The easiest and simplest way to find that out is by applying the gold I gave you today. Probably the most important lesson you'll ever learn, and that's the buy-sell line. If you apply the 50-period moving average on any chart, whether that be a 5-minute chart, a weekly chart, a monthly chart, a currency pair, a future, or a stock. If price is above, the overall trend is down, and you should only look for buy setups, regardless of what's my strategy or yours. If price is below, you should only look for sell setups. That probably is the most important lesson I can ever give to you. Okay, let me just take a few minutes to tell you about a great offer I have for you all today. We're going to offer you our strategy number 9 along with the PTS Primo charting platform. Okay, this is our super pullback strategy special. You'll get detailed video course instruction. You'll learn all the entries, the exits, and the stop placement. There are roughly 7 entries, exits, and stop placements in each one of those categories, so 21 altogether. So you get the entire course rules. You'll also get 1 year of the PTS Primo charting platform, which includes the scanner and something else I'm going to share with you in just a few seconds, okay? The beauty of having our platform is that there are many other features included. We have many other tools and indicators and edges and techniques that I've accumulated in my 4 decades that you can't find anywhere else. And one of them is our auto-generated exit levels. For example here, let's look at this example in MA, okay? Now, we had a buy signal generated here, and what you do to generate these exit levels is you simply double click on the arrow and it produces them for you. And you can see here you have 4 different spots which to exit. Now, we always tell our students to exit at the 4th level because that's a good 3-to-1 risk-reward ratio of where you're entering and then where you're basically exiting. Now, let's say you exited here for a nice 25-point gain in just about a month's time, okay? Not a bad trade. And then we had more of a rally and then a sell-off. But on that sell-off, another buy signal was generated. So you want to get back into the stock. You double click on the arrow. There you have the exit levels again, 4 different choices. We always tell our students to be out of the trade at the highest 4th level. If you had exited your entire position there, guess what? That's a 27-point gain. The beauty of these exit levels is that they have an uncanny level to get you out of the market in very opportune times, because this was at the end of February, and we all know what happened later on in the market, right? You see that? Had you held on to these positions the way so many traders do, you would have given everything back and actually turned the profit into a loss. How many of you have done that before? I'm sure just about the majority of you have had a profit and turned into a loss, right? These auto-defined exit levels will really help you to define where to get out and protect yourself. This is included in the platform offer. Trust me, a year from today, you will sit back and wish you became a member of this course. Not only because you want the information and the guidance, but also because most likely the price will be about double what it is now, because this is relatively a new course. We have students now trading it all over the world, so most likely the price is going to be much higher a year from today. Take advantage of this great offer we have for you. Here's what we're going to offer you. Our super pullback strategy special, most likely if you purchase this independently, it would cost you over $4,700. We're not going to charge you anywhere near that today. Here's what we're going to do. We're going to discount it up to $29.95. And we're also going to offer you payment plans. Now remember, you're saving roughly over $1,700. This also includes 1 year of the platform. Now, if you can't come up with the $29.95, don't worry. Remember, for a limited time, you can establish a small deposit with ProTrader Strategies and still be up and running. Have a payment plan. That's a great way to get on board and have you become a student of mine. So here's how to take advantage. As you see right there, contact ProTrader Strategies. I developed the platform with them. They're in charge of all the technical service as well as the costs and the discounts and the current discount we have for strategy number 9. You can email them. I would suggest calling them directly at 310-598-6677. There's absolutely no obligations. They have qualified trading consultants manning the phones right now. They would be more than happy to work out a payment plan so that for a small deposit, you can still be up and running. Okay, so I think that would be the best way to go, really. And remember, don't feel afraid to call them up. They're not going to try and sell you. They'd be more than happy to give you an estimate of what it'd be requiring. But please do not sit on these offers for long, because these are for a limited time only, and then the price will go back to over $4,700. If you've been struggling, this is a great, great offer to take, okay? Now, I'm going to open up the question and answer portion. If you have any questions, please go to the question and answer box. And once again, I apologize for that technical delay we had, but I believe it was an internet thing or a GoToWebinar thing, but we should be okay. Ryan says, can you apply Forex indices and futures? Yes, you can, Ryan. I think you may have asked that before I got to those examples, but excuse me, as you saw, I showed you examples in the ETF and the spiders. I also showed you example in currency pairs in that 4-hour chart of the dollar yen. And then lastly, I showed you a 5-minute chart of the E-mini that happened just last week, okay? Let's see here. Is one of the rules that above the 50 go long and price below the 50 go short? Well, that's not one of the rules. It's basically one of the guidelines, okay? The guidelines, as I've been saying over and over, I don't know if you just joined us or not, but if price is above the 50, the overall trend is up. So just thinking, I mean, basically, I mean, if the overall trend is up, why would you want to sell? Imagine you're swimming in a stream and the trend or the current is going lower. Why would you want to swim upstream? You know, it's silly, right? But that's the way most traders trade. So that's the basic guideline, which is included in the rules here, if you want to state that as a rule, that if price is above, you're only going to be getting buy signals generated. And price is below, you only get sell signals. I just spent the entire hour sharing with you the examples, and they all had that same thing in common. All the sell signals of strategy number 9 were below the 50, okay? Is this better than strategy number 4? Well, there's no such thing as better, because, you know, that's subjective, and they're entirely different strategies based on different parameters. You know, it's like saying, going up to someone and saying, is this piece of cake better than this other piece of cake? Well, that's just, you know, you can get 10 people saying yes and another 10 people saying no. So it all depends on how you want to trade and what you like to trade. Now, strategy number 4 is kind of a hybrid. It will generate signals that are in a continuation mode, meaning that if price is going higher, it will pause and then generate buy signals as it goes higher. Whereas strategy number 9 will not generate signals as it's going higher. It waits for that sell-off. Remember, it's a pullback defined strategy. So it's entirely different means for entering into a trade. So you have to decide what type of trader you are. Do you want a lot more action with more signals? Well, then strategy 4 may be the way to go. If you want to buy, if you're the type of trader that likes to buy at a lower price, the way I do, then I think strategy 9 is the way you want to go. But there's no such thing in anything is something better or not. And if you're asking about winning percentages, remember, in order to get a winning percentage, that means we have to take statistics and records of how someone trades this the same way every time. And if you remember at the beginning of the presentation, our goal is for you to decide how to trade, not us. So that means there are a number of ways to trade this. What we provide as an educator is a basic format telling you how a signal is generated, but how you want to enter, how you want to exit, how you want to place your stop, as I've said repeatedly, is up to you. So how can you have a win-loss ratio if you have 1,000,001 ways in which it's able to trade? Remember, I said there are roughly 7 different ways to enter. There are 7 different ways to exit. There are 7 different ways to place your stop. That's not including the subjective ways in which you want to use. So how can you apply a win-loss ratio or any statistic? All we know is that our feedback from testimonials from students who are already trading this are just rave reviews, and they've turned their trading around for the very first time, sometimes in years. So it's really one of our best. Talk to the trading consultants at Pro Trader Strategies. They can give you more information. And that link you see at the very bottom is the link that will take you up to the sign-up page. If you're ready to sign up online, that's the link, but you have to copy and paste that and post that on your browser, okay? It's not a live link. We just simply click it on. Any more questions? Good questions. Yes, more people are asking if we can use this on other markets. Yes, Bitcoin, sure. I mean, wherever there is a strong trend and then a counter move in a trend, you can apply strategy number 9. It's a great strategy. Someone's asking about option trading. Yes. Now, in the course, excuse me, we don't actually tell you what options to trade because, once again, that goes against our philosophy. We're not telling you, well, buy the April 250s. We don't believe in that. That's up to you to decide. But if you're an option trader, this is a great course to take because some of these signals are generated at the low portion of these little sell-offs, and therefore it just stands to reason logically that the premiums will be much less. They'll be less expensive. So that's where you would want to take advantage of this if you're an option trader. We have lots of option traders who are trading this. In fact, we had a student who was trading another of our strategies. I won't mention which one it was and whatever, but because of the format, it really wasn't conducive to his type of option trading. And so what Pro Trader Strategies will do sometimes, if you're not satisfied or it doesn't help your specific style, they'll substitute it with another strategy. So he chose strategy number 9, which we recommended. It helps better with option trading. And he is just delighted. He said he is just making so much success with this particular method because he is an option trader and he likes to buy calls and buy puts. And the prices are so much less expensive than they were with the other strategy. So if you're an option trader, this is something you really want to explore. And once again, contact Pro Trader Strategies. There's no obligation. They would be more than happy to give you more information about pricing and about this strategy that actually you can apply on the platform as well. Remember, you're also getting a year of the platform, which is unbelievable itself. There's so much more things included on the platform, which I didn't go over. So as we come to the conclusion here, I just want to say thank you for attending. I hope you got something out of this. Remember, the most important thing I could have given you that is worth its weight in gold is the 50-period moving average. Go back and back test it yourself. If you're looking for some amazing rule or technique today, you're really missing what's right in front of you. It's the 50-period moving average. It's an amazing tool that will really bring consistency to your trading. Also, remember, after the year, you still have the strategy. It's not like the strategy isn't yours. You know all the rules. But after the first year, you have the option to resubscribe to the platform. This time, you most likely have to pay. You have the full year for free. But you can work and negotiate that with Pro Trader Strategies. So they can tell you the pricing for that after that, but you're in no obligation to continue if you don't want to, okay? As we close and take one last look at our disclaimer, I just want to say thank you so much for attending today. Remember to contact Pro Trader Strategies if you're really serious about taking your trading to the next level. And I hope all of you become students of mine in the Strategy #9 course. Okay, thank you so much for attending. I'll see you next time. Bye-bye.